Invitae has been in a downward spiral for quite a while now. In Q4, I finally decided to sell my shares of Invitae, and the recent cost-cutting measures haven't been enough to get me back into the stock. Welcome back, everyone. My name is Arias, and today we're going to be talking about why I sold my Invitae shares, as well as some recent news that will have a big effect on the long-term business.
Hey, this is Arias in the future. I was getting ready to post the video when the most recent bankruptcy news broke. I think the video still stands pretty well on its own, and I added my updated thoughts onto the end, so stick around for that and enjoy the video. Let's start out talking about Invitae's most drastic cost-cutting measures yet. First, in mid-November, Invitae announced they would be divesting of their Citizens Health data platform. Citizens' assets will be transferred to a separate entity funded by a group of VCs. Invitae will maintain a minority stake in the new entity and will continue to collaborate to pursue Citizens' goals. At the same time, they also laid off another 15% of their workforce outside of Citizens. This comes after laying off nearly a third of their workforce in July. This is a massive reduction that you would expect to have a large impact on the company morale. However, Invitae said the combination of the spin of Citizens and the layoffs are expected to save the company $90 to $100 million per year. This would be enough to eliminate a large part of their ongoing cash burn, which was guided to be at the end of the year $220 to $250 million. It's hard to say exactly what effect this will have on revenues, but if the whole data business was to go away, this would result in roughly $45 million less in revenue going forward, and would have brought this year's revenue down to $440 million, about a 10% decrease. It may not be the case that they are losing the whole data business, but I think they probably are, and I will look for more clarity on the Q4 earnings report. In much more jarring news, in late January, Invitae announced they are selling off their women's health business to Natera. This is something I speculated about, as the reproductive health business was not as tightly integrated as the other portions of the business. The transaction is valued at $52.5 million, but it's not all cash. Natera paid $10 million upfront, with potential milestone payments of up to $22.5 million, based on the volume of testing services that Natera is able to retain. Natera will also provide Invitae cash and/or litigation-related credits for a combined value of up to $20 million, and ensured Invitae that their past damages on Invitae's PCM product will be covered by this $20 million. They also expect the transaction to save $44 million per year in annual cash burn, which is the real reason for the deal. The loss would have reduced Invitae's revenue by $105 million this year, or about 22%. In combination with the spin of the data platform, I estimate this would have reduced Invitae's revenue to $340 million in 2023. These deals are pretty jarring to see, as Invitae is selling off core parts of their business in an effort to survive. We can start to understand more of why they are doing this by looking at their cash balance, which stood at $265 million at the end of Q3. They reaffirmed their guide for $220 million to $245 million in ongoing cash burn, and it burned $168 million at the end of the quarter. This implies something like a $50 to $80 million burn in Q4. With all of the one-time costs that come with layoffs and divesting of the data platform, I would expect that to be closer to the high end. That will imply that they will end the year with about $200 million in cash and equivalents. Now let's try to understand how they will fare next year. Let's assume that they end the year at the midpoint of their ongoing cash burn guidance, burning $230 to $235 million. If you then factor in the $90 to $100 million saved from the Citizen spin and the layoffs, and $44 million from the NIT business, as well as some other miscellaneous savings from operating improvements of around $50 million, you should get to an ongoing cash burn at the end of 2025 of around $46 million. And in that year, they may have burned somewhere between $75 and $125 million, depending on how much they were impacted by one-time expenses related to all these changes, and how quickly they were able to put in place the cost-cutting measures. But if these numbers are a good guess, they would make it to 2025 with somewhere between $75 and $125 million in the bank. That would be cutting it pretty close, and it would take additional effort to get to cash burn neutral. If they were to do that, it would then fall on them to return to revenue growth while staying at cash burn neutral. That would be huge to the company, but before we talk more about what I would expect at that point, let's discuss why I sold, where I think I went wrong with Invitae, and my lessons learned. When it comes down to it, I sold Invitae because the company is now on life support. They're selling off core and significant parts of their business. Often, once this downward spiral begins, companies don't exit, with employees who aren't fired leaving for better opportunities, and employees who stay remaining unmotivated and overextended trying to fill their gaps. This can seep into a culture of a company and put a ton of pressure on its future. This leads me to my desire to own companies that are growing fast into expanding markets. Clearly, with all of the turmoil in the last 2 years and increasing recently, Invitae is not doing that. The markets that they're in clearly still have huge potential, but Invitae is not in any sort of position to capitalize, given their recent financial woes. While there is still a chance for a turnaround, and the recent deals make this more probable, in my opinion, it's still going to take an awful lot of execution when the company has not been shown to be adept at that recently. Finally, the catalyst for pulling the trigger when I did was really tax loss harvesting. It significantly reduced my tax burden for last year and will do the same for this year. Let's move into where I think I went wrong. To me, this is extremely important to examine when you have a failed investment, so I can evaluate where my blind spots and biases lie and adjust for them better in the future. For me, I think it comes down to an optimism bias. I was default optimistic that the company could turn it around and be successful, when really they had not shown evidence that they will be able to do so. In reality, I should have thought about it as a probability-weighted distribution of a certain amount of percent chance they will turn around and be successful, weighted with how probable it would be they would go to zero. In hindsight, a highly successful outcome was a low probability, and I should have sized my position accordingly. An additional learning is my sensitivity to debt load. Now, Invitae is the only company I own with significant debt loads, so I already have some level of sensitivity to it. I was ready to ignore the majority of it, because it was mostly convertible notes. This goes back to my optimism bias, in that I thought that these would just be dilution because, of course, that the stock would reach these prices by the time they would come due. It was also at very reasonable rates, which I didn't realize would not continue forever. Of course, I should have reasoned that all good things come to an end eventually, and money can't be free in perpetuity. Finally, and this seems super obvious looking back, but I didn't look enough into companies competing with Invitae and would have better helped me understand where their advantages truly lied. If I did, I would have seen that PCM is a more competitive market and would have been more focused on hereditary testing data as their true advantage. This would have brought my outlook for the company down considerably. Moving into some of the lessons learned, I will look to gain a much deeper understanding of the competition around all of my future companies. I will be making videos covering this research going forward, and if you have any companies that you'd like me to start with, let me know in the comments. Another learning is related to debt load and cash burn rate, and how much this inhibited Invitae's growth. It should have been a huge red flag to have both large debt and massive cash burn. In the future, I will be paying more attention to how resourceful a company is, even in times of relative abundance. Another thing I wanted to mention is that my investing philosophy allows for some losses like this. Obviously, you avoid it at all costs, but know it is a realistic possibility and even certainty, and accept that risk that I am taking because I'm betting on companies with huge potential. I want to make a few high upside bets where I would only need a few to pan out to be successful. Invitae is one of the ones that didn't pan out, to say the least, and while that's painful, it's part of the market that I've chosen to be in. Even after this most recent drop, more than 80% of my capital is in Tesla, a company that I'm very comfortable with it being. With the remaining 20%, I want to learn how to spot future opportunities, as Tesla won't always be as undervalued as it is, and I need to have skin in the game to learn how to spot these. Future Arias is back, and like I said, in even bigger news, multiple reports say that Invitae management is preparing to file for bankruptcy. My first reaction is surprise that this is happening so soon, with probably about $200 million of cash still in the bank. However, I will admit that I thankfully don't know much about bankruptcy proceedings, and that following this process will be a learning experience that I will take forward with me. I assume this is happening now because it will provide some way to restructure and come out ahead rather than waiting and trying to make it through. I have seen some smart people on Twitter that agree in thinking that the timing is odd and have cast doubts on the validity of those reports. I will be looking to the next communication from the company to clear up the status. Looking back on Invitae, it's very hard to incinerate as much capital as I did. However, it will yield valuable lessons for me going forward as a young investor. I will continue to track the markets Invitae was part of and look forward to realizing the potential to help so many people. Thanks for watching and have a great rest of your day.